Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social media. My guest today is investor, speculator, banker, and failed retirement guy, the legend himself, Mr. Rick Rule. Welcome, my friend.
Lucian, a pleasure to be with you. Thank you for having me back.
Thank you very much. Rick, I look forward to see you again this year in Boca Raton. Like I said a couple of times already, last year I really enjoyed it there. It was very well organized, a beautiful place there, and with great people and speakers where I could spend my time with some of them, including, of course, you and people like Nomi Prince, Grant Williams, Adrian Day, Craig Perry, many others. It is worth every penny. So if you want to meet experts from the investing and commodity world, CEOs, this event is definitely one of the best out there. I will leave the affiliate link where my viewers can sign in definitely. But before we do that, please tell us a word or two about this year organization of the event.
Well, I'm delighted to say we had a great conference last year, partly due to your efforts on our behalf. Attendance this year is up year on year. The stock performance of our exhibitors was fantastic last year, led, of course, by Agnico Eagle, who will be back. This year, what I'm really excited about is we're bringing back David Stockman after several years of absence. David wrote a wonderful book called The Triumph of Politics. For those who don't know, David was the director of the Office of Management and Budget in the Reagan years. And he presided over the first failed attempt to reduce the size of US government. And so he's going to talk to us about the probability of the Department of Government Efficiency succeeding in reducing the size of the US government and the political challenges about that. He's written a new book about how to actually trim $2 billion. I'm sorry, three zeros missing. How to actually trim $2 trillion out of the federal budget. It is, needless to say, very amusing reading. David has become a friend of mine over the last 30 years, and people will find him a very bright, very clear, but very humble speaker. So I'm delighted to have him because in many senses, with the US economy being 23% of the world's global savings and investment market, it plays an inordinately large role in the investing climate around the world. And I think it is beginning to play an inordinately large role in the gold price, given the very recent, very large buildups of New York physical gold stocks relative to London physical gold stocks. So I'm delighted with all aspects of the conference. But to be honest, I'm particularly delighted about David Stockman and his insider's discussion of the US budget and the US deficit and how that might impact capital markets.
Yeah, I really look forward. Will there be, of course, a boat cruise this year as well?
Of course, it's odd that you put on a conference for 28 years, sweat all the details, and one of the most popular features is a boat cruise where all you have to do is show up and, buy alcohol for the attendees. But yes, we will absolutely have a boat cruise this year. It's too popular not to have it.
Agreed. Rick, in today's episode, I would like to cover four commodities. The micro and the macro for gold, silver, copper, and uranium. And after that, if you agree, we can cover 10 stocks from each of these commodity groups. I want to start with the big picture for gold first. The world is in geopolitical mess. Central banks are buying like there is no tomorrow. The inflation factor, the dollar factor, multiple factors giving the push for gold price. How do you see gold performance in the remainder of 2025 and even beyond?
It wouldn't surprise me in the very near term, if gold were a little soft. It's had a pretty good run, and stair steps to heaven almost never occur. The macro factors you talked about are all true, and they're all bullish for gold. If you look back over the last 100 years, the most important determinant of the gold price has simply been, pardon me, faith or lack of faith in the maintenance of purchasing power in savings instruments denominated in fiat currency, but particularly in the US dollar. Lucian, if you dial yourself back to 1970, I realize you can't do that because you weren't born yet, but if I dial myself back to 1970, coming into 1970, the US had 20 years of real economic hegemony around the world. But we became, as Americans, hubris-ridden. The consequence of that is that we were spending more than we were saving. Sounds familiar, I know.
Yeah.
In the decade of the 70s, the purchasing power of the United States dollar, according to the Office of Management and Budget, fell by 75% over 10 years. Not coincidentally, the gold price ran 30-fold. Past is, I believe, prologue. The on-balance sheet liabilities of the U.S. government exceed $36 trillion. The net present value of off-balance sheet liabilities exceeds $100 trillion. The only way to honor these obligations, I believe, is to reduce the purchasing power of the U.S. dollar. The last time we did it, the purchasing power of the dollar fell by 75% in the 10 years, and the gold price went up 30-fold. I'm not suggesting to you that the gold price is going to go up 30-fold, but Lucian, I need to say it wouldn't surprise me at all over the next 5 or 10 years if the gold price went up 3-fold or 4-fold. So yes, I'm a gold bull. Maybe not in the 1 week or 1 month time frame, certainly in the 3-year, 4-year, and 10-year time frame. And one more thing, Lucian, people always say to me, Rick, when do you think the gold price is going to move? Well, I think it's going to move in the year 2000. In the 25 years since 2000, the gold price has been up almost 9% compounded a year. It's gone from $250 an ounce to $2,900 an ounce. Gold has absolutely done its job. It's outcompeted the S&P 500. Pick an index. Gold has already moved, and I think it'll keep on moving. I hope I'm clear about that.
Yeah, and you are right about that. Let's move to silver. Could this be the year for silver where it runs to $50 or even more? I have listened to the interview with your friend, partner, Eric Sprott from a few days ago. He's predicting a significant price increase due to a technical deficit where consumption exceeds mining production, and he said like price target of 250, 500 is entirely possible. What's your take?
If you give me the use of the word possible, yes. Eric has always been more aggressive than I, which is why he's wealthier than I. Here's what I've learned, Lucian. I've learned that precious metals bull markets are kicked off by gold. The narrative has to be established by gold. When the generalist investor is attracted to the momentum in gold, he or she, some point in time in the move, defaults to silver, and silver moves further and it moves faster than gold. But the narrative needs to be established by gold, and I'm not certain that the narrative is established enough that we're seeing the generalist investor come down into the space. When that happens, Lucian, you won't need to ask either Eric or myself. It will be obvious to you. I've lived through one major market in silver and two fairly small markets in silver. And when they're happening, nobody has to ask. This is a commodity on steroids when it moves. Everybody wants to know when. Sadly, I won't venture a guess. My default might be to Eric, but he's always more aggressive than I.
Okay, fair enough. Rick, uranium. We are seeing signs of two things that both you and I, as speculators, love, and that is hate and capitulation.
Yep.
Is uranium back to hated and painful levels enough for you to aggressively add your positions?
I will be aggressively adding to my position. Now, it's worth noting that I did add pretty aggressively to my position 8 or 10 weeks ago, and I'm down fairly substantially from there. The uranium juniors, the basket of high quality uranium juniors, is down by 50%. And that's certainly attractive to me. And there's a real mismatch between the structural uranium price, which is represented in the term market, and the nominal uranium price, which is in the spot market. To the extent that some producers who have locked in term contracts are fulfilling those contracts in the spot market, enjoying the arbitrage, and not having to produce the pounds. What's more important is that not one speculator in 1,000 understands the importance of the term market and the ability to lock in prices and volumes over 15 or 20 years, which is to say, putting a floor underneath net present value. Most people's sophistication with uranium is simply, when is it going to go up? This is a perfect circumstance for me.
Agreed.
People who absolutely positively loved uranium and couldn't get enough a year and a half ago when the price was higher hate it now. And there's nothing I like to see more than hate. Will it turn around in a week or 2 weeks or a month or 6 months? I have no earthly idea. But a basket, a well-chosen basket of, say, 10 of the highest quality uranium juniors, I suspect will be a 5-year triple from here.
Agreed. Agreed. Rick, fourth commodity is copper. How do you see copper short term, mid term, and long term?
I don't have a view short term. I've learned not to think short term. The truth is that we're using substantially more copper than we're producing. And the amount of copper that we produce is going to fall. We, for 30 years, have underinvested in copper exploration and copper development. At the same time, the cost to produce copper, particularly the social costs, off concession investment requirements, government royalties, government taxes, government carried interests, and the costs of regulation are going up. If, and I don't know that we will, if we have a global recession, supply can fall and demand can fall and prices don't rise. If we don't have a global recession in the next 5 years, the copper price will be not merely higher, but much higher than it is today. Structural uses for copper are growing fast at the same time that production is falling. The new electrical economy, which everybody talks about, electric vehicles are fresh on everybody's mind. What's more important, Lucian, is the fact that 1 billion people on Earth have no access to primary electricity. In the next 20 years, they're going to get it. And that takes lots of copper. Copper in generation, copper in transmission, and once you get the electricity to the house, copper in utilization. So I'm attracted to copper. I'm attracted to copper stocks too, because copper mines are often very big mines, and very big mines can make you very big money. There are probably a couple dozen copper mines in the world right now that cash flow in excess of $1 million per day. Per day. And these are often multi-decade long mines. These are the mines that over 5 or 6 years can literally change somebody's lifestyle.
Yeah, Rick, this is a part of the show where I want to hear your opinion on certain stocks, some pros, cons, your expectations, some things that you think that could go bad, that could go right. So we will start with gold companies, the 10 gold companies, 10 silver companies, 10 uranium companies, and 10 copper companies. Of course, you can include your ranking as well if you want. We will start with the biggest names in gold. The first one is Newmont.
Let me start by saying that these comments are being recorded on the 7th of March, 2025.
Sure.
That's important because news events can change the view. In other words, what we're talking about today are snapshots in time. This is not timeless information.
Exactly.
Any investor who wants to can submit their own natural resource stocks to ruleinvestmentmedia.com, and for free, I will rank them, which is to say that what is true today might not be true 6 weeks from now.
Or even next week.
Correct. Having given your viewers that disclaimer, let's
go
go
full
forward.
Disclaimer, Rick. I got it. Let's start with gold and Newmont. What are your comments?
I have Newmont as a 5, midway between 1 and 10. That outlook has been improved because Newmont, after their merger with Newcrest, embarked on a campaign of selling off their second-tier mines. Their target for the amount of money that they would raise in the process was $2 billion, and so far they've taken in $4 billion. The $4 billion is useful because it shores up the balance sheet. It's also useful because it frees up management's time and attention to focus on their tier one high quality mines rather than a bunch of second tier mines. I have Newmont as a five. If Newmont can deliver on budget in terms of all-in sustaining costs next quarter without the share price going up too much, I will raise that ranking to a four. It is all about them meeting guidance next quarter.
Agreed. Great overview. Next one is Franco-Nevada.
Going from strength to strength. Franco-Nevada, you will remember, got knocked by 40% last year with the nationalization of the Cobre Panama copper mine. First of all, Cobre Panama was 15% of Franco-Nevada's net asset value, and the nationalization caused the share price to decline by 40. This is simply stupid math. The rest of the portfolio is performing fairly well, and I would expect either compensation or more likely a restart of Cobre Panama. I have Franco-Nevada as a four. I would have it as a three. It's simply that the stock has started to perform. And until we have reality around Cobre Panama, one can't reassign a higher ranking.
One
I think
very
it's
interesting name for me, Skeena Resources.
I'm attracted to Skeena. I have it as a four. Your challenge there, I think, is a finalization of the financial arrangement with the Tall people. And the very important discussion around the penalties that Skeena will face because they're shipping high quality concentrate, but concentrate that they get penalties for because of the arsenopyrite. Once we understand what the penalties will be in the concentrate shipment, we'll be able to do a much better job of doing net present value calculations around Skeena.
Agreed again. Agnico Eagle.
Agnico Eagle, I still have as a four, despite a truly spectacular price run up in the last 12 months. I have it as a four because they consistently beat on all-in sustaining costs, and they have what I believe is the best growth profile among the majors. It's worth noting that that is now the most expensive, or at least the highest market cap gold stock in the world. They have delivered and delivered and delivered. Their presentation at last year's Boca Raton conference, I think, was one of the high points of the conference. They let you know how you actually run a real gold company.
Yeah. Mr. McCluskey's Alamos Gold.
Alamos I have as a five. They've delivered a lot of good news. My only problem with Alamos is their ability to continue to deliver at the rate that they've delivered over the last 2 years. McCluskey has been a friend of mine for 40 years, and I certainly root him on. He's done an absolutely spectacular job. And the growth could come from retooling Mulatos, the original asset. That's a very large gold deposit that they've paid a little less attention on as they've expanded into Canada. Coming back home and retooling Mulatos may deliver the growth that shareholders have enjoyed over the last 2 years.
Yeah. Do you own Seabridge Gold?
I do not any longer own Seabridge Gold. It gave me everything I wanted. Seabridge is an optionality play. They control well over 100 million ounces of gold in the Golden Triangle in northern BC. They have great relationships with the host First Nations, the Tahltan. I'm aware of this personally. They've done a very good job in terms of pre-works. The only thing I have against it is the high market cap and the high front-end capital costs. You could be surprised at any moment in time if a major decided that they wanted to add 150 million recoverable ounces to the book. They could do it in one fell swoop by taking over Seabridge, and that's Seabridge's game. But no, in answer to your question, I don't own it.
Okay. Rob McEwen Mining.
I have added McEwen Mining. Rob has done a wonderful job shepherding the company through very tough times. He's an investor that I've watched for 4 decades. And while the start date is uncertain, I'm impressed by his tenacity. I'm impressed too by the cult of shareholders around McEwen. The
Yeah.
people that McEwen attracts are particularly aggressive investors in a gold bull market, which I believe we're going to have. And I think that McEwen shares, as a consequence of the group of people around him, will outperform others. In other words, people driven by the narrative will be attracted to McEwen before they will be attracted to people who have lesser reputations in the industry.
Yeah, his name really carries a lot of Good stigma. IAMGOLD.
I don't own IAMGOLD. I'm delighted to see that they've stick-handled through their problems. I suspect now that the ramp up at Côte Lake will do well. IAMGOLD is what I'm looking at because Côte Lake is a very large deposit. Their balance sheet is getting better. And my suspicion is that if the share price doesn't go up, they might be part of the amalgamation craze. Hitherto, they've been the acquire-or, not the acquire-e. But if Côte Lake begins to fire on all cylinders, either the share price goes up or somebody else owns it.
Yeah, I believe that was eight. Two more. Who did I have on the list? Yeah, Osisko Gold Royalties.
Osisko Gold Royalties, there's many companies named Osisko these
Yeah.
days. Osisko Gold Royalties I own. I think the whole royalty sector has sold off over the last 2 years undeservedly. I have Osisko Gold Royalties as a four. I think both it and Triple Flag, relative to the rest of the big royalty companies, are attractively priced. And my suspicion is that if the share price doesn't go up, that they will disappear into the maw of either Wheaton Precious or Franco-Nevada.
Final one is another royalty, Metalla royalty and streaming.
Metalla I don't own, although I'm beginning to be attracted to it as a consequence of price. It's one that I sold simply because it performed too well. It gave me everything I wanted plus. And the consequence of that is that I sold that name and bought names that I thought were cheaper. The underperformance of Metalla makes it, of course, more attractive to me by virtue of price, but I do not own it.
Okay. I believe that was 10 gold. Let's move to silver. We will start again with the big ones, big names, Pan American Silver.
Pan American Silver is in the middle of a turnaround, and I think people who are attracted to silver must own Pan American. I would note that over 55% of the revenues are now gold, so it's less leveraged to silver than might otherwise be the case. But they have two very large undeveloped silver properties on the books, or at least non-producing silver properties. Navidad in Argentina, and one would hope that the change in politics in Argentina allows Pan American to bring that project into production. And then, of course, their wonderful deposit that they got from Tahoe in Guatemala, which has been shut in for the last 4 years. Both of those are 500 million ounce silver deposits, and both of them are available inside Pan American for free. That's your leverage to silver. I have Pan American as a four. They've done a reasonably good job disposing of assets that they acquired in the Tahoe takeover, and they've also done a reasonably good job uh, making the sustaining capital investments needed to tune up that portfolio of assets.
Okay. Hecla Mining, what's your take on Hecla?
I do not own Hecla.
Not anymore.
Correct. I do not own Hecla. I have Hecla as a six. That assumes, of course, a flat silver price. All of my rankings assume flat pricing. Hecla really outperforms in a rising silver market because they're a high-cost producer, so they enjoy greater leverage to higher prices. They're also a brand name for silver. So despite the fact that I don't own it, people who are more aggressive on silver than I, say Eric Sprott, should fill up their boots.
Yeah. Next one is First Majestic Silver. What's your take on them?
I don't own First Majestic, although I'm very close to Keith Neumeyer, the CEO. I don't own it simply because I want to see a turnaround at Jarrett Canyon. They are in reasonably good financial condition as a consequence of taking over Gatos and the great free cash flow from Gatos. One needs to note that the Gatos free cash flow only lasts 6 or 7 years without some additional discoveries. So the challenge is going to be for First Majestic to utilize that free cash flow to either tune up operations, primarily Jarrett Canyon, or to explore around Gatos and extend the reserve life. You have a fuse problem at First Majestic.
Do you own Endeavour Silver?
I don't own Endeavour Silver. Endeavour Silver seems to me to be, I like really big, really low cost, really sustainable mines. Endeavour Silver is extremely leveraged to the silver price. It's a great optionality play. But the consequence of that is that in a flat silver market, it usually underperforms as a company.
My big position, Vizsla Silver.
I have a big position in Vizsla Silver in it too. This is a consequence of my belief that they will enjoy, pardon me, ongoing exploration success. It would appear to me now that when they develop an exploration thesis and test it with the drill bit, that their understanding of the deposit has become predictive. In my life, when exploration becomes predictive, you really are at a fulcrum point with regards to reserve additions. And I think and hope, as opposed to know, that
Yeah.
that's where Vizsla is right now.
Yeah, Rick, what about Mag Silver?
I own Mag Silver, high quality. I think the exploration potential off to the southeast, towards what we believe was the heat source for that deposit is very good. They are really humming on all cylinders. The general and administrative expense remains shockingly high, relative to what would be needed to be a minority partner in a high quality silver camp. But I own it anyway. I sort of hold my nose over the general administrative expense and own it because of the excellent financial performance and the excellent exploration upside inherent in the company.
Yeah. Sean Kun, Dolly Varden Silver.
I own Dolly Varden, although I've sold enough that I have no cash left in the position, which is to say I've recouped my capital, and I've paid the capital gains tax on recouping my capital. So I have half the position that I had last year. The game here is, can you tie the two different deposits, the Ridgeline deposit and the Valley deposit, together? If you can, you have a truly monster silver deposit.
I believe two more. Next one is Gogold. It is actually silver and gold producer from Mexico. What's your take on them?
I own a lot of Gogold. I suspect the next 3 or 4 months will be challenging. They're in sort of the boring permitting phase. Once that's done, and once construction is financed, I suspect that you'll see Lobo Tigres Golden Runway take place. This is another one where the exploration is becoming absolutely predictive. This is a string of pearl style deposit, which is to say, a series of probably on echelon lenticular veins. And what I like about it is the drilling is truly becoming predictive. The other thing I like about it is the general administrative expense is under control enough that they fund the G&A entirely from the tailings reprocessing, something that 3 years ago I didn't think was going to work. I'm delighted to have been wrong.
Yeah, what about GNA from Fresnillo?
Are you asking me about Fresnillo in
Yeah,
particular?
yeah.
Uh, Fresnillo, given the size of the operations and the manufacturing operations, I'm not disappointed with Fresnillo. I wish it were a simpler company to understand, um, but or I wish it would amalgamate upstream with Peñoles. But I do own Fresnillo.
Sorry, this is the final Silver Crest metals. Do you own them?
Silvercrest is gone. Remember, they were bought by Corp.
Sorry. Yeah, correct. You're right.
I do
Uh,
not own Corp.
yeah.
For the same
Rick, my
reason.
favorite
Sure.
commodity, uranium. Let's cover uranium names.
Right?
First, Kazatomprom.
Kazatomprom, I still own, but I've been a seller. My nervousness with Kazatomprom is that I don't understand why they've lost so many middle-level employees, some of which I know. There are obviously political problems within Kazatomprom or political problems within Kazakhstan that has caused their human resources, which I consider to be the best in the uranium space, to go away. I'm disappointed with the restart of Inkai, which I had expected would be very good, but I've come to understand it. The company's concern with regards to U.S. sanctions against Russia have constrained their purchase of Russian-sourced sulfuric acid. I understand that that problem is on the way to being resolved because they're going to reinstate the purchases of Russian sulfuric acid, which should assist with the more timely ramp up of Inkai.
Yeah, what about their JV partner on Inkai, Cameco? What's your take on Cameco?
I own Cameco because if you like uranium, you have to own Cameco. When the generalist money comes in the uranium space, the first place it parks is Cameco. Cameco has also been much more fiscally disciplined than they have in the past. They've said that they won't return the big assets to production until they have contracted out enough material that the shareholders are guaranteed a reasonable return on capital employed. And thus far, they've done it. You're also seeing some of the older long-term fixed price, low price contracts roll off. Looking at the average realized price that Cameco received for their material for the last quarter, it looks to me, admittedly just with a pocket calculator, that they were receiving something like $78 or $79 a pound, which is up substantially from the quarter before.
Denison, I know you have worries about ISR mining in Athabasca. Are you still worried about that?
I'm still worried, although I need to say I've studied the feasibility study in some more detail, and I would say I'm cautiously optimistic. Understand there's a lot of difference between a feasibility study and turning on a mine, but
Always.
there's a lot that can go wrong.
Yeah,
To say that I'm confident would be wrong. To say that I'm less unconfident would also be true.
fair enough. Amir Adnani, UEC, Uranium Energy Corp.
UEC is probably fully priced, and I think it's going higher. Amir did a wonderful job of acquiring assets when they were out of favor, and
Yeah.
he is very, very, very methodically going about the process of increasing it. Among the two, I would probably prefer to own Uranium Royalty over Uranium Energy. Uranium Energy has the torque, but I think in terms of price to value, Uranium Royalty is probably the better pick.
Okay. I know that you had Fission in your portfolio, so now it's Paladin. What's your take on Paladin?
I think Paladin, there's development risk and there's financial risk. But my suspicion is that the share price of Paladin goes up or Paladin gets taken over. Those are the two choices.
By
Uh,
who?
don't know. Doesn't much matter. Anybody who wanted to be in the uranium space, they have three developable deposits. The market is expressing skepticism over their ability to raise the money. And I suspect that they'll be able to raise the money in the term market. I suspect that they will be able to offtake with Tokyo Electric Power or China General Nuclear. I think that there are a lot of financial opportunities available to Paladin as a consequence of the term market.
Okay. What about Nexgen? Brilliant asset, but can you digest their G&A?
Their G&A is high and some of it misspent. I'm not really certain what benefit shareholders get from sponsoring Vancouver Canuck hockey or Formula One racing. I own it, despite those protests, because it's the best undeveloped uranium deposit in the world. The company is doing an admirable job of de-risking it, albeit there are real problems in their relationship with the Métis.
Mhm.
Uh, it's difficult if you like a sector not to own the best deposit in the sector. And that is the best deposit in the sector. There have been management missteps. It's pretty obvious in retrospect that selling that high-priced convert to buy pounds was a mistake. The optics were bad too, where the management team sold the convert with in effect voting rights on the conversion. So the optics around that were very bad. Having said all that, I own it because the deposit is that good.
Yeah. Do you own Energy Fuels?
I do not own Energy Fuels, although I like the job that they've done. That seems to me to be a collection of lower quality, lower sized assets. I understand the benefit that one would get from their permits. I get that, but I don't own it.
Yeah. Next one, I believe a lot of my followers want to hear your opinion on Global Atomic.
Uh, Global Atomic is really a function of can they find a lender who can stomach the political risk in Niger? The government of Niger is making very positive noises, and I'm delighted that the Roman family is doing what they can to assuage the people in Niger by starting construction even without having the financing. Uh, this is a real crapshoot. You are looking for fiscal stability out of a country in transition that doesn't necessarily have fiscal stability on offer. Uh, it is in, I think, I think it's in the interest of the country for the country and the financiers, including if the financiers are International Finance Corp and the World Bank. I think it's in everyone's interest to arrange a fiscal stability outcome that allows the mine to be built. But thus far, that hasn't occurred.
Yeah, but do you see maybe a joint venture as a more realistic approach, more realistic scenario for them?
Sure, but while I see it as a more realistic scenario, I don't see any evidence that it's occurred. For me, until I see material progress on the financial front, I can't own the stock, despite the fact that it is stupidly cheap.
Okay, the legend John Borch of Deep Yellow, we are expecting their final investment decision. What's your take?
Usually a mistake to bet against Borshoff.
Yeah.
Sometimes too far along, he takes on too much debt. Right now, he has a bunch of cash, so he's in very good condition. John Borshoff has made me an awful lot of money, and I own a very immodest position, which is to say, large position in Deep Yellow. But mercifully, he's delivered such share price performance since my first purchase that I've been able to sell enough Deep Yellow that despite the fact I have a very large position, I have no cash exposure in it. I'm in a wonderful circumstance where I have a large position that's paid for.
Great. Rick Bannerman.
Uh, Too small for me in terms of, I mean, lots of exploration upside, but they need to drill it off before I own it. I like the management team. I like the deposit for what it is. But in terms of proven pounds that could be produced, I don't see the size yet to attract me.
Okay, final uranium company is ISO Energy. Do you have them?
I own some ISO. Again, I'm lucky enough to own it for free, which is to say I sold enough in the uranium share run up that I no longer have any exposure, financial exposure in my position. Certainly that position for me is smaller than my position in Nexgen and Deep Yellow. But yes, I have a position and I'm delighted to say that position is free.
Okay, do you have some uranium exploration plays in your portfolio?
I don't at present.
Okay, so you are out of the
I
exploration
don't need
plays.
to at present.
Okay, okay.
I have a lot of sweat.
Final
You
group
know,
is copper. We will start with Freeport-McMoRan.
I own Freeport, and I have for many, many, many years. Um, Good financial discipline, good balance sheet, good all-in sustaining costs. The opportunity, if they wanted to raise virtually any amount of development capital that they wanted to raise by selling a byproduct gold and silver stream on their copper production.
Excellent. Big one, BHP.
I own BHP. I don't think you can have a mining portfolio without owning BHP. I regard it as an iron ore company rather than a copper company, despite the fact that they have formidable copper assets. I would expect a production decision in the next 5 years involving doubling the size of Olympic Dam, which is already the largest uranium mine in the world and one of the largest copper mines in the world. So the growth in copper in BHP is built in at Olympic Dam, which is already producing.
Yeah. Do you own any interest in Codelco?
I don't. I
Okay.
don't. I've watched Codelco for a very long time. Understand it's basically part of the Chilean state.
Yeah.
Codelco has been raped for cash for 30 years. The Chilean government has used the dividends from Codelco to fund current account deficits in the military budget. The consequence of that is that the company has been severely underfunded.
Yeah. Yeah. The next on the list is Anglo American.
Anglo, I don't, and I wish I did. Anglo is one of those where either the price goes up or merger discussions recommence.
Yeah. Another A, Antofagasta.
Antofagasta, I don't, although I have from time to time. What I didn't see in Antofagasta is the intermediate term growth opportunities. Certainly, the financial performance and the diversification of the company are attractive, and their ability to build mines on time, on budget is attractive. But I don't see the intermediate term growth potential there.
Fair enough. Glencore, do you own Glencore?
I own a lot of Glencore. Glencore, your risk is all political. They've paid about what, $2 billion in fines around their acquisition practices, shall we call it that, over the last 20 years. They did a great job in the coal business. When everybody else was running away from coal, they ran to coal. And the consequence of that is that the coal-derived cash flow in Glencore is crazy. Do not own Glencore if you can't take political risk, because there's lots of it there.
Hmm. Do you own First Quantum Minerals?
I do not own First Quantum, although it's very cheap. If you see a resolution in Panama, which I think you will, but I don't know you will, First Quantum likely doubles. Most of the balance sheet damage that was done is in the process of being repaired there. And their remaining operations seem to be performing fairly well. This is really a Panama option now.
Okay. Southern Copper.
I don't own it, and I would prefer not to comment on it at present. It's one that a couple people on my staff are reviewing.
Okay, no problem. Ivanhoe.
I own a lot of Ivanhoe, and I'm delighted to say, never mind having any cash exposure, I've taken a lot of cash out of it. Understand, I was a 63-cent buyer, which is a wonderful thing to say about a $13 stock. They go from strength to strength. Are there challenges in the front? Yeah, they're putting a big platinum mine into production in a bear market for platinum. They're also putting a big zinc mine into production. Meanwhile, they're enjoying spectacular exploration success in the 100% owned Western Forelands, which is on strike to both Kamoa and Kakula. Strength to strength to strength. Political risk, yes. Some financing risk around the very large capital expenditures that they're making in South Africa in the platinum business, which is certainly a challenging location.
Yeah. Final one, maybe it's too small for you. It's Faraday Copper.
I'm sort of attracted to Faraday, but you put your finger on the problem. The deposit is too small for me. The fact that it's too small for me and it seems to be large enough for the Lundins is an interesting paradox. They they have a habit of focusing on large, high quality assets, and they have made smaller assets like the Eagle mine work very well for themselves in the past.
Yeah. That was 10 uranium, 10 gold, 10 silver, and 10 copper commodities. Rick, if our viewers want to continue this, how can they send their portfolio to you to rank them?
Absolutely. Go to ruleinvestmentmedia.com and list your natural resource stocks. Please, no pot stocks. Please, no crypto. Please, no technology stocks. Rule Investment Media, natural resource stocks. Allow 10 days to 2 weeks for a turnaround. I'm way behind right now. But send your portfolios to ruleinvestmentmedia.com. I personally will rank them 1 to 10, 1 being best, 10 being worst. I will comment on individual issues, just like we did in this lightning round, where I think my comments might have value. Rule Investment Media, please be patient with the rankings. I'm way behind coming back off PDAC.
What about banking stocks?
I don't rank bank stocks at present, although, of course, I'm a serial community bank investor. And as you note, the founder of a new bank called Battle Bank, which I'm delighted to say will have, thank you, a very important announcement about the acquisition of a bank in the very short term. People who have listened to these interviews in the past will know that we've been 4 years and counting in the de novo stage, the application stage. We're short-circuiting that, which we should have done 2 years ago, by paying too much and buying a small bank and recapitalizing it. That announcement will be public very soon. We're basically ready to go. The technology's done. We have had great uptake in the market. For those of you who don't know, we started a bank 25 years ago called Everbank, which was probably the fastest growing online bank in the country. We sold that bank in 2014. At the time we started that bank, Everbank, we had zero customer backlog in 1999. The waiting list for Battle Bank is approaching 17,000 people. So when we open, we'll open with a bang.
Definitely. That was, like I said, investor, speculator, banker, and failed retirement legend, Mr. Rick Roll. Rick, thank you for coming to my show, and we will see each other in Boca if we don't record another interview in the meantime. I believe we will. Thank you very much, sir.
Thank you. I enjoyed the process, and I look forward to visiting with you both online before Boca, and then, of course, in person at Boca. I look forward to sharing a glass of your favorite beverage on the boat cruise.